Hello everybody, I am some old guy with MS. In this video, I want to talk to you about Tesla. Now, Tesla is a very interesting stock. There is lots and lots and lots of hype about it. So the big question is it justified? I'm going to try and examine Tesla and ignore the hype and just look at it from a financial point of view. It's going to be hard to ignore the hype because on YouTube, there are so many YouTube videos about Tesla and how to retire on Tesla stock, how many you have to buy, what it'll cost you, and so on. Well, I don't want to do that. I just want to look at the stock and try and determine if it's a good investment. So I am going to look at all the financials that I usually look at and try and draw a conclusion. So please excuse me as I talk to my computer and get my notes up. Start listening. Start listening. Of course, it's being stubborn. Start listening. Mouse grid. 3, 6. Click. Stop listening. Okay. The price when I looked at it was $993.33. Its 52-week range is from 546 up to basically 1200, a little more than 1200. So 900, we're near the top end of the range, but not at the top. So a pretty good range. Okay. Market cap 1.927 or 28 trillion dollars. So it's a big company. Big company. PE ratio 292.67. That is huge. That's a PE ratio that a internet company would have. For a car company, it's outrageously high. Earnings per share, $4.98. So it has earnings, but not huge earnings. Dividends, not applicable. Price to book, 33.72. I'm not really quite sure about that. Uh, revenue 90. No, sorry. Revenue is 53 billion. Revenue per share, $54.69. It's not bad, I guess. Net income, 5.52 billion. Let's see. Quarterly earnings growth, 759%. Wow. Now that is impressive. That is good. Total cash, I think that's 17 billion. Cash per share, 1713. That's pretty good. Current ratio, 1.38. Now that is not very good. Not very good at all. So they've got a little more assets than liabilities, but not very much. Book price per share, $29. Let's see. Operating cash flow, 11 billion. So from what I know, which is not much, it's a big company. It actually has a lot of money coming in, but it's not making a huge amount. Revenue was 53, well, let's say 54 billion. That's the revenue. And net income is 5 billion. Well, 5.5. So let's see. Well, it's about 10%, right? But diluted earnings per share, 4.98. That seems to me to be quite low for what it's making. So for my opinion, this looks like I'd say an okay stock, but certainly not spectacular. They got to get their liabilities down. Now, let's see what the analysts say. Well, the analysts are all over the place on Tesla. Their average rating is between a buy and a hold, and their average stock price is $9.77. Well, we're at $9.93, so we're above their target price. Let's see. um, 19% of the stock is held by insiders, and about 42% is held by institutions. So, what does that mean? I don't know. It means that a lot of institutions like this stock. Now, just let me switch back. I gotta talk to my computer again. Start listening. Mouse grid 1, 6, 3. Click. Stop listening. Now, the things that make this stock interesting are, well, first off, their factory in Shanghai was closed due to COVID. If it's open yet, I don't know. But let's say it was closed. Let's say it is closed due to COVID. There's a new factory in Germany, in Berlin, and it's open. It's not in full production, but it is producing some. And there's a new factory in Texas. I don't think it's quite completed yet. So right there, that is why they have so much liabilities. Building 2 factories at once costs a lot of money. Now the other thing is, with Shanghai closed and Germany just starting, they don't have a lot of revenue. So the revenue actually is probably down. Well, for this quarter, for this last quarter, revenue will be down. Liabilities will be way up there. Now, I think they have a quarterly report or meeting. I think it's coming up tomorrow. So what we will find is the first quarter this year will be terrible. All the numbers for the first quarter will be really bad. It'll make this look like an excellent stock with the numbers I have. But they are, from last quarter of last year. Really, that's what they're pointing to. But, I said analysts are all over the place. There are some analysts that say it's worth $250 a share. And other analysts, like Kathy Wood of ARK Investment, she has a target of 4,000. When the gigafactories come online, we'll have a lot more income. So I think this stock will go up. It will do good. So I would suggest buying some. Anyway, I'm not a financial advisor. Please like, subscribe, share, and all that stuff. Start listening. Mouse grid 6. Click. Bye.